All right, you guys can hear me now?
Yes, we do.
Yes.
All right, all right, all right. Sounds perfect. Perfect, perfect. So, I was telling you guys that in today's session, we're going to talk about a little bit about BTC and we're going to talk what BTC is doing, what it was doing today, and then we're going to have discussion on about our topic of today. So, as we all know that BTC had a sharp decline today, and people were referring it to the new AI model launched by China, which surpasses the open source AI, which is previously present, the ChatGPT, in both monetarily wise and both productivity wise. So, since it's such a very powerful AI agent, people are seeing it as the new AI future. So the already present AI projects in crypto and everywhere else, they had sharp decline in their prices, in their stocks, and that's why that was the reason of the drop. That is, although it is a reason for a drop, but we have to look at it that why we were bearish on Bitcoin. And it's simply because I've told you guys many times that we have to draw these lines, we have to draw these resistances, and BTC was clearly near the resistance zone, near the supply zone. And not only was it near to the resistance, it was clearly at the supply zone. So, where is the supply zone? So over here we had a really big supply zone. For those of you who haven't watched the supply zone lecture yet, please make sure to watch it. So if you look at over here, BTC has been clearly having some supply over here, some supply over here, huge supplies over here, supply again, again supply, again supply. So this whole area is a supply, a big one. Okay. Now, all right. Now you can see that a BTC, it's getting rejected again and again. It's descending again and again from this zone. So this makes it the supply zone. And we all know that BTC or any coin, they rise from the demand zone, go all the way up to the supply zone very systematically. This was the demand zone. This was the supply zone. It was clearly levitating between the supply and demand zone. And obviously from over here, BTC has to go to our supply zone, obviously, to our demand zone, obviously. And that was our TP, quite right around here, 103 to 500, 10300, actually. So clearly respecting it and then dumping, and then it dumped really big. So overall, it was just respecting our levels and then gave us an additional dump, which obviously was not predicted by us, but we were bearish on that. So not only would we be in profit, but otherwise would be away from loss. And this was the reason why BTC was bearish from here. And I believe that out of all the concepts that I will be teaching you and have already taught you, supply and demand zone are far most important ones. And for that, we have to pay more attention to it. Not just to like the supply and demand zone itself, but to how to actually spot these supply and demand zones. If you guys are able to spot supply and demand zone correctly, then it's worth it. Otherwise, if that's just a talk in the air, right? If you cannot spot it correctly, because red candles are going to be everywhere, right? To actually determine what is the supply zone is what the expertise is. So I want you guys to practice it more and more, because the other things I taught you are pretty straightforward. Fair value gap, pretty straightforward. The patterns I taught you, pretty straightforward. Could come with experience, but pretty straightforward. Now, the supply and demand zone, it's not really that straightforward. You have to have a good eye to actually spot it. You have to have some good experience to spot it, and you have to have, yeah, you have to do the practice. So I cannot emphasize this more that you guys have to practice the supply and demand zone. Now, um, every lesson I teach you every day, I always demand some homework out of it, right? I always say that you have to submit some homework, you have to do some homework on it, like the patterns I taught you. And then some of you do that, some of you don't. But for supply and demand zones, it's a compulsory. In our course, we always make it compulsory that supplies and demand zones must be practiced again and again, and then discussed. So, yeah, as every course have many assignments, so this shall be your first assignment, and the assignment shall be starting from tomorrow. So, what this assignment basically is that you have to find 2 to 3 setups every day till 40 setups. Now, you can complete uh, this 40 setups of what's that word called? Milestone. You can complete this milestone in 2 days, 3 days, that's up to you. But 40 setups everybody has to find, and they have to take clear screenshots, they have to take pictures, they have to send them every day in the group, and then they have to compile it in the form of PDF and then send it to us as their assignment. So that's going to be your first assignment. I'm going to be giving you more assignments, but they're going to be much easier than this one. The reason this is a little lengthy and extensive one is because it is really important, and without practicing the supply and demand zone, it's just like practicing. It's just like you're not doing it up to the mark. So you have to. I cannot emphasize this more. You have to complete this assignment, right? And in the meanwhile, we'll be having lesser lectures unless you people are like completely doing the assignment, because if you're not doing the assignment, then there's no point. If you're not practicing supply and demand zone, you're always going to be lagging. I see you guys or having some productive discussion in the group, which is absolutely wonderful. And you guys should always discuss with each other, like, oh, found this supply and demand zone, and this coin, I found the supply in this coin. It looks really good. Maybe it's gonna be bearish from here. Perfect setup for us to short. Like, have these productive discussions. Don't just let me do the talking. Don't just listen to me. Speak about it. Do it. Do it. Because listening is very beautiful. Everybody likes to listen. Nobody likes to do it. My job is to actually make you do the work. Because if you're not doing the work, if you're just listening to me, there are videos out on the YouTube which you can watch and then do whatever you want to do. What I want to make sure in this course is that once this course is done, you guys are already professionals. I don't want to be like ending up this course, be like, okay, this was the knowledge I knew, and then like, okay, bye bye. See you never. No, I don't want to do that. I want to be you guys. I want you guys to represent us on our world, on other platforms, everywhere else, neighborhood, everywhere. So when people ask, where did you learn from? You will know, they will know that you were students of a good mentor. So that's why, my friends, you guys have to emphasize. I cannot emphasize this more. Please complete the assignment as soon as possible. And how the way to do it is that simply you have to find the supply and demand zone. Not just that, you have to make sure you have to monitor it for 2 3 days, see if it's respecting the supply and demand zone, and see if you can buy at the demand zone and sell at the supply zone. Are you able to do that? And if it's completely respecting the supply and demand zone, if not, then why not? Are you drawing the supply and demand zone correctly? Are you drawing it on all the time frames and it's matching? Is everything working out? See, these are the things which you have to practically work on, which will take time, which will take hours. This is not just a 1 2 minutes game. This is hours game. You have to put in the work. You have to manually monitor it the whole day, 2 days, 3 days, whether it's respecting the price or not. What's happening with the price? And all these things you have to manage all of them. And then, my friend, that's one setup done. And I'm asking for 40 setups. That's quite a lot. But once you complete these 40 setups, you believe me, you will see quite a noticeable difference in your trading level, in your understanding of the charts. You will start to see the charts. You will open up a chart and automatically will see supply and demand zones, and your brain will be wired in a way to work on that. And obviously, I will be looking at your assignments every day, pointing out some mistakes and seeing how you guys doing. And at the end, you have to compile uh, all the 40 setups, what you did with the setups, and then add some audio behind it and actually explain it that what happened over here and what happened over here and make it an absolute productive assignment, the one which we can showcase as a trophy, that this is our trophy that our students gave to us in the form of absolute skill and absolutely acing it. So basically it's again supply and demand, which is causing BTC to dump. And today, we had some considerable uh, demand over here. So BTC did give us a little bit of a peak, but it's dumping again. But that's really not important. The important thing is that if you can mark these supply and demand zones and then carry out the trades in between them and make good money. All right. So in today's topic, we're going to be talking about candles finally. Right now, it's not that all the indicators are already done. It's not that all the chart patterns are already done. It's like we like to intermix it so that you guys don't get bored. And plus, all the things which you need to know go on intermixed and just it's not dry, right? So in today's session, we're going to be finally talking about candles. So far, we have already talked about patterns. So this is a pattern. So candles, a lot of candles make the patterns. We've talked about indicators, we've talked about zones, we've talked about support and resistances, the key concepts that actually build the base of trading. And we have talked about so many other things, but we haven't talked about actually the candle itself. So the candle, which you see when you zoom the graph in, which has a wick up here and a wick down there, or it could be a red candle. So today we're going to talk about that, right? And we're not going to be talking about minute details of the candle. We're going to be talking about a broader perspective, a strategy basically that we can use by looking at the candles. So without wasting time, I'm going to start our today's session. Thank you so much, everyone, for joining us. And we're going to be starting our today's session. So as you guys all know, that let's start with the candle. This is a candle. It has a wick top up here and it has a wick down here. Now, when this candle is already formed, this this brick in the middle is called the body of the candle. Body. And these are the wicks that the candle is giving, right? Not going to go into too much detail. We're just going to keep it simple, really simple. Now, what I want you to understand over here is that this point and this point, the edges of the brick, both of them could be either it could be either the start point of the candle or the closing of the candle. Now, since it's a red candle, the top shall be the start and the bottom shall be the closing. If it were a green candle, then it would be opposite. The bottom shall be the open and the top shall be the close. So basically, the open and close of a candle is the top and bottom of the body. We're going to use this concept and see if we can make a strategy out of it. Now, again, the strategy shall be used among the support and resistance, among the supply and demand zone. Nothing works separately. That's why I don't like to pile up things on you guys, because otherwise you guys are going to start confusing it all. That's why I first wanted to make sure that you guys have already perfect the supply and demand zones. And then I wanted to teach you guys this, but I was like, okay, maybe I can teach you this along with the supply and demand zones. Maybe it will help you guys while you are doing your research on the supply and demand zone. So, without wasting time, we're gonna see how we're gonna use it. So, first of all, what you're gonna do is you're gonna go into the higher time frames, 1 day time frame. Uh, it's gonna take some time. There we are. Yes, here we are in the 1 day time frame, and as you can see, the Bitcoin was already at its resistance. So a drop was already expected because there's nothing Bitcoin can do except for dropping when it's all the way close to resistance. Because unless a breakout is given, the only thing Bitcoin can do is to just retrace back to normal support level. We've already gone through that multiple times. Bitcoin is consolidating these days, right? Between the support and resistances, and it has done it again. So many times it has acquired this support level again and again. And I don't know how many times I've drawn this graph, this whole representation. Again and again, it's rising, it's falling, it's rising, it's falling, and again, it rise all the way up to the resistance level. It got rejected, and what else could be expect after it got rejected other than just an absolute utter fall? And now, more fall is even expected from here because BTC has yet to acquire a support. So we can just go back all the way up to the support at 96 or 95 level. So this is basically really straightforward if you're looking at a bigger picture. So that's why I always tell you guys, look at the bigger picture because there's so much more information in the bigger picture because smaller time frames, it kind of seclude you out. In smaller time frames, you are watching at sharp candles forming and it kind of throws you away to determine an overall trend. What's an overall trend? All right. So again got thrown off. So our today's topic was candles. So what you have to do is that you have to first identify, you have to determine a bias. So what is a bias? A bias is simply by looking at a higher time frame and determining whether it's an upward trend or it's a downward trend. Now, I don't think it's really hard to interpret that this is an upward trend and then this is a little downward trend. This is again downward trend, a little upward trend, downward trend. Now, once you've determined a bias, this is called bias. Just to look at a higher time frame and determine whether it's an upward whether it's an upward going um, what's it called? I don't know. My mind is a little foggy today. I don't know. Yeah, whether it's an uptrend or downtrend. See, I'm not even remembering the uptrend and downtrend. What's happening? A little foggy today. Okay, so you have to determine whether it's an uptrend or downtrend. Once you've done that, you have to identify one candle, the recent most candle. Okay, so right now we are in the downward trend, right? And we are expecting more downward trend too. So this candle shall be our most important candle. So what you're gonna do, you're gonna mark the top and bottom of the candle. You're gonna mark the opening and closing of the candle. Well, let me just mark it. You have to mark the opening. This is where the candle is opening. I told you the open of a red candle is at the top because it's coming down. So here's where it opened and here is where it's closed. So you have to close it at its lower body. Now, how is that going to help us? Well, that is for us to look at the lower time frame. Now we have to go to the lower time frame. All right. We are now in the lower time frames, right? Now what you have to do while in the lower time frame, you have to buy, you have to sell when it's above the open and then close the trade when it's above the when it's below the closing. So basically, what we would do is that we would wait for the candle to go all the way up till here and then we short it up till where? Up till where the candle is closing. So as you can see, the candle was the chart pattern. It was rising. It climbed all the way up to this closing of the candle, and from there it is clearly dumped, right? So this one is already completed, right? So let's take another example. Let's just go into our daily time frame. Now that was for the bearish setup, right? Let's say it's a bullish setup, right? Like this one right here. Let's just consider this candle right here. Let's do it again. Let's just discuss this candle. Let's say this candle is forming, and what we want to do is we want to mark the top of the candle. This is the top of the candle. All right. What's with it? All right, there it is. It's a nice boy. I don't know what TradingView is doing today, but it's getting on my nerves now. Look at that. I think so many people are using it. It's glitching right now. All right, I think I got it. Okay, I didn't. All right, I think we're good. All right, so what we're gonna do is what we did basically is that we marked the top, we marked the open and closing of a candle. So you guys are gonna revise it with me. It's a green candle. Where's the closing and where's the opening? Is this the opening?
Is down.
Exactly. This is where the candle is opening. This is where it's closing. Simple strategy is we will enter when the price is closer to the opening, it crosses the opening, and then we close over here because it's an upward trend, right? Uh, yeah. So let's just zoom it in now. Let's just go into the 15 minutes time frame. And as you can see over here, oh, I lost it. All right, it's here somewhere. It's like really far off candle, so it's like really hard to monitor. There it is. And over here, we are going to be having that candle. Okay, I think it's at infinity. Yeah, there it is. All right, so here's our candle top and bottom. I think it's here. Yep, it's here. So these are the two bars which I marked as the candle's opening and closing. So as you can see, it's nothing like it was looking at the candle. It's not just a complete close or top. So basically, it's opening from the bottom. So what you gotta do is you just gotta buy at the bottom and then sell at the top. And as you can see, it's really respecting at the bottom. It would first, it's already at the bottom. It would come. So this is what majority of the candles do. They are at the bottom. They would rise from there. Then they would retest the bottom again, the opening again, and then they would climb all the way up to the closing. And as you can see, as soon as it touches the closing, it rejects. So this was a completely good trade. Where would be your stop loss? Here's your entry, and your stop loss will be a little below the closing of the candle, or you as you can, or you could call that the end of the wick of the candle. Could be your stop loss, and then the target is going to be the closing of the candle. Similarly, if it's a red candle, then you're going to be opening over here, and the wick or a little above your opening is going to be your stop loss, and then your take profit is going to be at the end of where the candle is closing. So that's like one of the strategy which really works good while you are trading on shorter time frames, while when you want straight moves when you want some good future trading, right? This is not really something to do with longer time frames trading. So the reason I taught you this today, because while you are playing with supply and demand zone, it's more likely a bigger time frame game, right? When you are doing supply and demand zone, it's more likely bigger time frame game. So how to actually determine what's going to happen in the smaller time frame, like one directional move, because if you're doing a future trading, then you really need like a directional move, like majority of the candles in one direction, not a lot of consolidation, not a lot of up down movement, and then movement in our specific direction. So this strategy would really help you out while you are looking for those future setups to form. Now, one more thing. Now, you might question in your mind, you didn't. That was very thoughtful of you. You didn't, but you might question in your mind that how to determine an upward or downward trend. Now, obviously, from a longer time frame, it's really easy, right? You could just look at the trend and you will get it, right? But there's also another way, and that way I'm going to show you right now. All right, I'm going to go into the indicators section, and I'm going to type EMA, moving average exponential. All right, I'm gonna add this moving average exponential, and to their sincerity, they gave me twice.
לא יודע למה, שאני נושם כואב לי פה.
All right, the inputs used to be 300.
דיברתי איתו? מקווה שזה לא דלקת ריאות.
Now, so it's really hard for us to. Okay,
לא
I got
חיכוי.
that one. All right. Yeah, exactly.
לא.
Yeah.
Excuse me, why is 300?
Come again, yes.
Why is 300 in the length of the EMA?
Could you please repeat it again for me, please? Thank you.
Yes, you put 300 in the length.
All right. I think it's a lot of noise distortion on the mic. I would be really grateful for you if you can just type it in the comment section, in the chat section. I will just happy to read it for you.
Yeah, so he said that why 300 in the EMA?
Yes.
Like, why?
300 days moving
Yeah.
average is really helpful while you are just EMA doesn't really help you to determine a trend, but when you put it at 300, then it's really helpful. It's just coming from straight experience. It's not really something bookish knowledge. It's just like 300. When you put it at 300, it really gives us the trend. So when you're using to EMA, put it at 300. Okay. So how are we going to use it? It's really this simple. If the chart is above the EMA line, we are in the upward trend. Now, normally you cannot see an upward trend in 15 minutes time frame. It's something that's only seen on the 1 day time frame. But even if you are on 15 minutes time frame and you have EMA on, you can see like now you can see that we are in the uptrend. Now, it's not going to help us with that candle concept, but it's going to help us a lot when we are going to be doing a lot of other things, like when we are using MACD or RSI. So if MACD and RSI, you are using MACD or RSI and chart is in the upward trend, then make sure that MACD does not deceive you, because over here MACD would deceive you, over here MACD would deceive you. So make sure you're following RSI with it. And if you're following RSI and MACD, then MACD won't be able to deceive you. And that's one way to determine the trends. And if the chart is altogether below the EMA line, over here there's below the EMA line, then chart is most likely then the trend is most likely going to be in the downward trend. So EMA helps us to determine whether we are in the upward trend or in the downward trend. I think our friend over here was first asking that there are so many resistance and support lines. What's going on? Basically, the reason why there are so many of them because it's like a mess. First, we were discussing in our first few lectures, very beginning ones, we were discussing just the support and resistances for which these lines are for, and then we were discussing our supply and demand zones for which these lines are for. And today we were discussing our how to use a strategy which involves the use of candles, and just by using the candles, we can make successful trades and we can determine whether the price will go up from here or down from here. So basically the price, what it does is that it goes from the opening of the candle to the closing of the candle. It really likes to do that. How it does is this: it opens from the candle and then it retests the candle back again and then goes back down. So the way I like to trade it is that I look for fair value gap whenever price is coming down or towards the towards our closing of the candle. I wait for it, then it goes back again, and it usually leaves a fair value gap over here. It goes back again, fill up the fair value gap, and then come back down. So that's like a usual thing that happens with us a lot of time. And I also gave you examples, live examples, how it's clearly respecting the opening and closing of the candle. So my dear friends, let me just check up the chart he sent. Okay, why you put 300? Oh, I get it. All right, I think you got I got the answer too. So, was today's session helpful? You guys with me, or I'm just talking to myself?
Yeah, yes, Sam. Uh, I joined later in the call, huh? So I have to
All right.
watch
No worries, no
the
worries. You're
video
gonna
again.
have recorded session of it, so you can watch it as many times as you want.
Okay.
And thank you so much, everyone, for joining. One more thing I want to add on again. Please, 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 guys, do the assignment, complete the assignment. 40 setups you have to find out. Two per day is gonna be enough. As many days as you guys want, but do complete the assignment. All right, we're gonna be having fewer lectures in between, so you guys can perfectly first perfect the supply and demand zone along with this concept, because if you are not good with supply and demand zone, then other things are not going to be able, you're not going to be able to absorb it. Because the thing is, there are so many things, and when you learn so many things, when you have so many options, you have basically no option, right? When you go into a shoe store and there are 100 good shoes, you won't buy anything because you have so many options. When you have so many options, you don't have any options. So for me to be able to actually put the supply and demand zone into your heads is to basically make you an expert in first supply and demand zone, then I will teach you anything else. Otherwise it would just keep on piling up on your head and you will just be learning from one thing to another thing, and everything will be so confusing, and you'll be like coming up to me be like, everything is so confusing, what should we do? And then everything is going to be falling apart. So everyone, 40 setups, we're going to be having few sessions in between up till until all of you complete the assignment. Please, all of you complete the assignment. Submit 2 or 3 projects every single day, in form of pictures and anything. And at the end of the project, make sure you save those images, compile it in a PDF, submit